Welcome to the CEC Report. It's the 24th of May. I'm Robert Barwick and I'm joined again by the CEC leader, Craig Isherwood. Welcome, Craig.
Yeah, thanks, Robbie.
In this week's CEC Report, support for banking separation now overwhelming. Glass-Steagall banking separation is key to restoring the world's food supply. And finally, the demise of Ford. We told you so. So first, support for Glass-Steagall banking separation is now overwhelming. Craig, last week on the CEC Report, we announced that we've had a big breakthrough, which is the United States Senate has now a bill before it to restore the Glass-Steagall Act in the United States, which is the Banking Separation Act. And this was tabled by Senator Tom Harkin from the state of Iowa.
This is against those naysayers who said it was never possible.
That's right.
This wasn't going to happen, but now it has happened, and it's really shaping the internal dynamics of US politics.
Well, apparently, we've had a big groundswell of support for it in the House of Representatives from the bill that was tabled in January that by Marcy Kaptur and Walter Jones, and that's got 62 co-sponsors now, that bill. But the White House, of course, is opposed to Glass-Steagall being reenacted. They've put up. And
Ben Bernanke this week reacted against, even though he wasn't prompted, he said we're not going to have a Glass-Steagall. So yes, you can see the field is being shaped by the discussion around this particular.
So Ben Bernanke is the chairman of the central bank, the Federal Reserve, and he's the guy who was printing money as the approach to supposedly revive the US economy.
Yeah, he's the one that said we should just, if we get into bad trouble, we should just chuck money out of helicopters.
That's right, helicopter Ben Bernanke.
Yeah.
So what we want to do in this segment is we're going to play a YouTube video which has been prepared by the former Clinton Labor Secretary Robert Reich. And what this video does, it goes for about 6 minutes, it demonstrates the level of support for Glass-Steagall among the people who matter, and it makes the case really well. So watch this video, and when we return for the second segment of this show, we're going to talk about how Glass-Steagall is the key to restoring the world's banking supply.
Big banks, insurers, and other financial giants remain intact and arguably too big to fail. I mean, nothing really has changed.
No, definitely not. And if, in fact, if you want to look at it objectively, since 2008, the companies that we're talking about have become bigger and more dangerous.
And this is why it is necessary to limit their size and break up the biggest banks. Some former titans of Wall Street are saying much the same thing. Even Sandy Weill, who created the giant Citigroup, which required $45 billion in TARP loans and asset guarantees, Weill is proposing the biggest banks be broken up.
I'm suggesting that they be broken up so that the taxpayer will never be at risk, the depositors won't be at risk, the leverage of the banks will be something reasonable.
In the 1930s, we saw banks merge with, real estate and security risks, and the whole thing collapsed, 20s and 30s. And so we put in place, I wasn't here, but we put in place laws like Glass-Steagall to prevent all of that. And then in 1999, we were told that's all old-fashioned. Let's strip that away and allow big financial holding companies one-stop financial shopping.
Sandy Weill made a mistake in 1999. So did a lot of other people. Phil Gramm, Bill Clinton, John Reed. Lots of people were on board the repeal of Glass-Steagall.
Unfortunately, I was one of the people who led the charge to try to get Glass-Steagall repealed. As I sit here today, I regret those activities and wish we hadn't done that.
I think that the beauty of Glass-Steagall was it was fragmenting the industry so that they were not all lobbying in one direction. The moment we took that out, they all consolidated their interests, so they were all lobbying in the same direction, and they were too powerful to resist.
And the main reason I would like to see that is I don't want insured deposits being used to fund those higher risk activities.
You need something to break the bank cartel, okay, the top bank cartel. You need something to break them for the sake of finance industry.
We have to start breaking up the banks. If we are going to allow banks to become so big that they can't fail and we're afraid to restructure them, then we don't have ordinary capitalism anymore.
Therefore, my view, like the one of a number of other current or former policymakers like Mervyn King at the Bank of England or even Alan Greenspan today, is that if institutions are too big to fail, they're just too big and they have to be broken up.
Tell me this. Citigroup was, I said, $2.5 trillion when it failed. If it had been $5 trillion, would our situation today be better or worse? Okay, what if it had been $10 trillion? Or what if it was the size that RBS was relative to this economy? Let's call that $20 trillion. Would that be good? Would that be a good thing? Would it be better run? Would this bank be better run if it gets bigger?
So I believe you have to break them up. Let's go back to Depression-era laws that kept our system safe for decades and decades, like the Glass-Steagall Act. Yeah. Let's have size caps on top of that as a backup. Let's have a lot more capital requirements.
Well, let's put it this way. A new Glass-Steagall is what's the first step toward making banking boring. And I think that's just really the key, because it separates commercial banking, you know, savings accounts and checking accounts and that sort of thing, from the trading and risk-taking that occurs on Wall Street.
As Teddy Roosevelt told us 100+ years ago, it's time to break these guys up, because they have incredible concentration of ownership over our entire economy.
I feel like a real conservative on this issue, Peter. I want to go back to the way things were just 10 or 15 years ago. I want to go back to what we did after 1929 when we had the massive meltdown and the Congress actually wrote tough laws, Glass-Steagall, separating commercial banks from investment banks.
Today, people across the political spectrum, both parties, all ideologies, are speaking about the dangers of the large concentrated wealth of Wall Street megabanks. Another Republican in 2009, one a little familiar to a modern audience, Alan Greenspan, said, if they're too big to fail, they're too big.
Recently, George Will said, quote, by breaking up the biggest banks, conservatives will not be putting asunder what the free market has drawn together. Government nurtured these behemoths by weaving in a provident safety net and by practicing crony capitalism, close quote. And Peggy Noonan, another well-known conservative, has said, quote, if you are conservative, you are skeptical of concentrated power. You know the bullying and bossism it can lead to. Too big to fail is too big to continue.
There is strong support on both sides of the aisle, and we can't afford another Wall Street bailout. Any bank that is too big to fail is too big, period.
Welcome back to the CEC Report. Glass-Steagall banking separation is the key to restoring the world's food supply. Craig, a lot of people, when they initially hear about Glass-Steagall and the principle of separating banking, where commercial banks that hold deposits are protected from speculative banks, you know, their first point of access is, you know, everyone's concerned about their deposits, and that was a big issue in 2008 for all the world, including Australians. So that's, you know, that's a motivation. Oh yeah, let's protect our deposits. However, something that the US economist Lyndon LaRouche has started raising recently, which we're very conscious of here as well, there are much bigger reasons to have Glass-Steagall, and the biggest of all has to be the security of the world's food supply, which right now is in a severe crisis. You've just participated, as of this morning, in an international interview with the United States on this subject. You got anything to report from that?
Well, it's we have the opportunity to speak on the LaRouche show, myself.
The radio show,
yes, the radio show. Jean Robinson, our State Secretary, who's also a farmer with her husband Wayne in Western Australia, who's right in the hot seat of this this fight to try and preserve Australia's wheat farms. I mean, as you've heard on the show before, I mean, out of the 4,300 wheat farmers, 1,200 are sort of basically slated by the banks as being unviable, therefore wiped out.
Yep.
See, the problem we got with it's not a problem with Glass-Steagall, but the current monetary system, Robbie, is everything's based upon British free trade, British speculative monetary system.
So the making of money comes first. The production of food is
second.
subsidiary to that.
Yeah, and you know, you've got the situation today where every single politician, maybe one or two exceptions, is completely beholden to the banks. Now they would say, "Oh, we're not beholden to the banks. We represent the people." What a load of crap! I mean, the point is, if they were a representative of the people, then they would be enacting things like the National Bank that we've proposed. They'll be putting into place tariff controls. I mean, these are the sorts of policies that you'll put first if you're concerned about the general welfare. The proof is that every time, you know, we actually bumped into a Liberal Party member here in Victoria, and he was really gung-ho about, you know, supporting the farmers, and he was supporting the beef industry and so on and so forth. And then one of our supporters walked in with a CEC cap, and as soon as he saw the CEC, dead cold, as though he walked into a freezer. Because these people know that we represent a bigger policy than just a disagreement or a protest group around this issue. Look, Glass-Steagall means a separation of the speculative side of the banking system from the true commercial side of the banking system. But it also means, Robbie, shutting down the speculative activity of the economy, full stop. No more speculation in grains, no more speculation in food, no more speculation, full stop, which means you go back to supporting the actual producers. And you have policies of literally keeping people on the land, of supporting local towns by making sure that farmers are paid a parity price, what it costs to produce the food. Now, in the case of wheat, I mean, I've been reading reports where wheat can be stored for up to 24 years. Now, you wouldn't need to do that because the world's starving.
Yeah, it needs it.
But why? Go back to what we used to have with the Australian Wheat Board, and also we still have with the cooperative bulk handling, the ability to store wheat for the purposes of then trade further down the track. What's happened with the destruction of the Wheat Board is that individual farmers are now being thrown into a speculative market where you've basically got some huge international multinational players like Cargill, for example,
Archer Daniel Midlands, which
all
is
of those sorts of guys.
Corp.
You've got a little farmer now being thrown into to the same sort of market. They're not prepared for this sort of speculative gambling operation. But if you had a government say, no, we're not going to do that. You produce the wheat, we'll pay you $200 a tonne for it. We'll look after the marketing of it, right? It's a strategic resource actually for Australia where we can do deals with other countries for what we don't have. We can bring in, you know, what's called fair trade, not free trade. And consequently, it's a real asset. The farmers get paid, the communities get supported, but see, that's not the intention of what's behind this current system that we have.
So under Glass-Steagall, you have a whole sector of the financial system that's firewalled off from everything else, and this sector is what's regarded as essential. And deposits are in there and they're protected, but by definition, nothing's more essential than the finances relating to securing the world's food supply and a nation's food supply. And it all has to be brought in on this side of the Glass-Steagall wall, because if we don't, I'll just go through some figures now just to situate it for people, you know, how serious a crisis this is. We're going to put a graph up on the screen. What this shows, this is from the Food and Agriculture Organisation, which is part of the UN, it's Food Price Index. And you see a permanent jump in food prices since 2008. And so for 2 decades before that, it was sort of steady, and then 2008, a massive jump, and it's been wild fluctuation since then, and we are at the top of another peak of that. But we've had it, but the important point is a permanent jump. So since 2008, that's been the situation, and you've permanently had a billion people in the world going hungry, and that number of people is growing. The paradox, of course, is while the food prices have had this permanent jump, that's not going back to the farmers. The actual producers of the food are not getting that. You know, they talk about price signals and all this mumbo-jumbo economic claptrap. The farmers aren't getting that. They're told they will, but they never get it. That's why they're on their knees. It's the speculators and the cartels who, because the farmers have been thrown to them as like lambs to the wolves, as you've gone through, they're the ones who get to profit because they profit from shortages and they profit from uncertainty, and that's what's going on. Countries such as the United States and Australia, we're advanced industrial countries, we have brilliant food production infrastructure and systems, or at least we used to, but we're not contributing to the solution to this problem. We're actually contributing to the cause, because increasingly we're becoming importers of food from countries that that are actually going hungry. I'll give you here's some info about the United States, just some landmark items. The US has no strategic food reserves, none. No wheat, no corn, no milk powder, no butter, no cheese or vegetable oils. The only countries in the world that have food reserves at the moment are China, India, Japan and Vietnam. They have strategic reserves, no one else, and especially not the United States, which used to. The US food imports are rising. 16% of all food consumption in America is imported, and that breaks down to things like 85% of their seafood, 30% of fruits and vegetables and nuts, etc. The nations these food is coming from are nations that are going hungry, such as in West Africa, Egypt, Kenya and Haiti. Haiti of all places, right, where they really starve. The livestock food crisis in the US, which they have a livestock food crisis, means America's cattle herd is at its lowest level for 61 years, the total number of head of cattle. So beef output for 2013 is expected to fall by 1 billion pounds. And of course, in Australia, we know the situation here. We've got, as you've said, we've got the crisis in wheat and beef and fruit growing and the whole thing. And our imports are rising massively. And we've got the situation of what we've done to the Murray-Darling Basin. Part of the financial side of the farmers' crisis, Craig, is, let me just give the viewers this figure. Farm debt in Australia has, in 1969, farm debt compared to the total value of farm output in Australia was about 1 to 1. There was about $1 billion worth of farm output in $69 and $1 billion worth of debt that the farmers carried. Today, farm output is valued at $12 billion. Farm debt is $65 billion. Totally off the charts. And of course, that is a huge cost that's crushing these farmers. The farmers have had these protest meetings, Craig, where one of the things they've started calling for, and this is very interesting, it's actually quite an important development, is a Australian Reconstruction and Development Bank, which will help the farmers reconstruct their debt, which is a bit along the lines of the mechanism we're calling for. But just quickly in the time we've got left, we've already, we don't need this. The CEC has had on record since 1994 our legislation for the Commonwealth National Credit Bank. That is the solution, right?
Robbie, you can't go fishing in a storm. And that's effectively what's happening here. And it's a good idea for that sort of a bank, but the problem is the storm will just swamp it.
Yep.
And that's the problem, is that we've proposed that we need to have a fully fledged national bank. We need to have Glass-Steagall to regulate the system. Nothing else short of that's going to actually work. Yep. And then you have to go back to large-scale infrastructure development projects, including support of agriculture. And the problem is that people are trying to fiddle with the system. They're trying to say, oh, we've got to go along to get along in this system that's killing us. And that's where the problem is. I mean, the federal member for Kennedy, Bob Catter, is trying to play this game. It's a foolish game. It won't win. You actually have to stand up and say, look, this system is finished, and we have to do it on an international basis, Robbie, so that there's an international support, and that's what we actually represent. So
one of the
good
first
idea,
steps,
but I'm afraid I won't go fishing in the storm.
Good. So one of the first steps farmers can do if they're serious about really changing is vote for the CEC.
That's the only thing you've got. There's the only choice you've got.
All right, we'll leave it there. When we come back, we're going to talk about the demise of Ford. We told you so. Welcome back to the CEC Report. Finally, the demise of Ford. We told you so. Craig, what was your comment yesterday when Ford announced it's going to end manufacturing in Australia by 2016?
I just said, Robbie, look, we told people this was going to happen because you cannot have an industry like this, an energy-intensive, high-technology industry competing on the so-called level playing field of free trade. There is no such thing as the level playing field, and we've told people this time and time again. We've watched industries literally evaporate before our eyes, and people keep coming up with the same solutions.
And by the way, Craig, there doesn't need to be a level playing field of free trade. This is theoretical mumbo-jumbo. Each nation has its own interests, and they should pursue those interests. And if they did, they'd find they've got a lot more in common with each other than they think. But we are allowing in front of our eyes the reversal of the industrialisation of Australia. Building a car industry was part of the industrialisation of Australia. Before World War II, we were an agrarian backwater. right? And I mean, we had a fledgling car industry, but after World War II, with our capacity, let's build cars, let's build everything we need here. And that was what we're proud of, and now we're shutting it all down.
Well, see, Robbie, this comes back to, we had a conference on the weekend. It's up. It should be up on our website very shortly. I did a presentation on Ted Theodore. In the middle of the Depression, 1929, in actually 1931, he proposed the idea of a fiduciary note issue of creating £18 million to put people back to work. Now, that got knocked on the head by the Conservative upper house, and consequently we had about 8 or 9 years of depression, which was totally unnecessary. Under the Conservative government of Lyons, they went with this sound finance idea of slashing budgets and stop borrowing and basically cut like austerity today, and unemployment went up to 30%.
Male unemployment.
Male unemployment went up to 30%. And the strange thing was that people hadn't seen this before, but immediately the war was called, unemployment went from 30% to full employment. Now, from 1929 through to 1938, Australia stagnated in terms of its expenses at the governmental level. It spent £39 million in 1929. It raised to £81 million by 1938. As soon as the war was called, the Commonwealth Bank, which had been holding back under Sir Robert Gibson at that time, it wasn't going to create credit because they said it was inflationary, but this was a control mechanism of the empire to keep us in our place at that time. As soon as the war, however, broke out for the benefit of the English, immediately a 300% increase in the space of 3 years in terms of expenditure into the war effort. And then when John Curtin and Ben Chifley came in with all the price controls to handle the inflation, all the different regulations, the strict development of policy to throw money, literally throw money into the war economy, which means industrialisation, they spent 800% or £677 million in the space of 4 years, and that completely transformed and industrialised Australia in the space of 4 to 5 years.
And the point there is not so much what we were producing for, which was a war, but the fact that the rules of the free market and all this rubbish, when the war was on, that's all thrown out the window. No one hides behind that. Everyone accepts this is what we've got to do, and lo and behold, we can do it because a war's on. We don't worry about having those arguments. Without the war, all of a sudden, we've got to go cap in hand, as King O'Malley used to say, to the private bankers again and follow their rules.
Look, it wouldn't take very much at all. It'll take a radical shift in terms of the free market economy we have now. But in terms of the fundamentals of what we'd have to do, it's the same sort of principle of how you would mobilise the economy today by saying, okay, we're going to cut out the speculative stuff, we're going to start to fund farmers, set up the necessary infrastructure to do that. We're going to have industries in the car manufacturing industries. We're going to put a 25, 30, 40% tariff on our domestic cars. We don't care. We want to keep the 3, 4, 5,000 people in employment. We want to have a textiles manufacturing industry. We've got the wool. Let's do that. And you could have strategic industries, and who cares about what if that inflates the price of imported goods? Fine, because we want to have people that have a high income here.
Because we've all got high income jobs to pay for those goods.
That's the whole idea, is you've got to create high income paying
and Craig,
jobs
just briefly in the time we've got left, I think we have to start taking on another sacred cow in a sense. There's a consensus in Australia that one of the best things we did was float the dollar. Time to throw out that consensus because we really have to reverse that decision. Right?
When George Soros can make millions of dollars, $60 million in the space of half a second, based upon the collapse or the change of interest rates by the Reserve Bank, you've got a completely corrupt system here, Robbie, and there's no interest in supporting the general welfare of our Australian population. So if you've got a system like that, it's got to be smashed, it's got to be thrown out, and we've got to go back to a fully regulated system in the economy, exchange rates, tariffs, credit, the whole works. And if we don't do that, well, we're finished as a nation state.
Hear, hear. All right. That's it for this week's CEC Report. Thanks for tuning in, and tune in next week for more.